G'day, it's Johnny Seville from Acorn Wealth Corp Smart Money Trading, and I really hope you've been able to heed the warnings that we've been sharing over the last few months about this market. If you didn't, this could get worse. It could get a lot worse, but there are powerful moves to be had in both directions. This is absolutely the time. If you weren't paying attention yet, now is the time. So what you can see on the S&P 500. Firstly, a lot of people asked, how did you predict this? How is that? Again, it's all about patterns, but also tracking where smart money is going. I've talked about the massive insider selling that happened before the crash, record levels in the tech sector. I think they were all-time record levels from the CEOs. There's a numerous amount of factors. But graphically speaking, for those of you that are where charts and indicators are more appealing, this is represented here by our one of our smart money indicators we developed. You can see this sell signal that happened right there. We're looking at the weekly chart on the S&P. What that means is detecting that, forget the candles, forget the charts, forget the patterns, that behind all of that, it's detecting the algorithms moving out. So in some cases, even when things are going up, that the volume and things like that, the rug's being pulled out from underneath. And it doesn't happen very often, especially on the weekly chart. And so you can see this here on the weekly, right at the top, right? Boom, down we went. We had it there on that previous a very strong pullback, which was a 10%. You had the pullback here. The top of the 2022 crash, right at the top on the weekly chart, very powerful. So it's not just about any one thing, it's about the perfect storm. It's about the recipe. You've got the pattern, the smart money going at the back door, the insiders selling at the back door, and quite a few things that are about to unfold. Now, I'm going to be doing a very special workshop. I'm going to continue with a few more details here that I want you to be aware of today, but I'll be doing a special workshop on this tomorrow. It's not like any of the other workshops we were doing back in February where we were warning of this. Now we're dealing with, what do we do while we're in it? So I'll be doing a workshop tomorrow right after market close, 4 p.m. Eastern. There won't be any fancy videos and things to watch beforehand because it's just bare bones. We want to get this in front of you as quickly as possible while there's still quite a lot of opportunity here on the table, as well as protecting your capital. So I'll hyperlink you to that, or you can click the link in the top, one of the top corners, and get registered right now. 4 p.m. East Coast time, Wednesday, right after market close. Don't miss it. I'm going to be sharing my favorite strategy for this. And just so to put things in perspective, I took some profits on some of my puts here yesterday and a couple of days before as well. Again, I eat what I sow. This is some of the ways I was playing this, as well as others. I had puts on high yield bonds. I had puts on Google. I had more high yield bonds, and I also had a long that I was holding, which stopped out, so I lost money there. That's right. Not even I get it right all the time. But by having my puts, I was able to hold my longs and have that loss offset by the profit in my shorts. So the reason I say this is because I'll be looking, and I am looking right now, for new short positions to be taken if we break lower here. This is it's very likely, whether it happens right away or soon. There's a very specific time frame that we expect things to fold out in, and we'll be talking about that, and the indicator that actually tells us that tomorrow. So there's some powerful setups here. But I'm going to go to the daily chart very quickly to show you this. Okay, so I'm on the daily chart, and this is what I've been talking about for these last few weeks, right? If you joined us back in the February Capture the Crash webinars, this is where we warned about this before it happened, right? Now it's happening, but there still could be a lot. There is a lot more likely to occur. Now, some of the comparisons I wanted to draw your attention to. I'm just going to take the indicators off the charts because I want to focus. I want to focus on just the pattern. If we go back to once again that 2020, which was the last video I shared with you last week, I said, where were we on April 3rd? I said that essentially on April 3rd last week, we were here on in the pattern. And that we could expect to drop. Now I want to just show you again likening this to 2020 in the exact same technical pattern, what happened after that big leg down? Well, in 2020, it dipped its toe beneath the water. If you remember me talking about that, dipped its toe beneath the water, broke support, and actually rallied to a high. And that measurement, the short squeeze, was 9.6%. 9.6% from the low to the high of the short squeeze. Now, let's go over to the right-hand side. Let's go back to the right. Right? Exact same pattern. One of the reasons why we were able to predict this, anticipate this, right? And I promise you, we're going to make it simple. We're going to go over this tomorrow and the rules that we look at and how we're scanning for the next set of ideas. So it's not just about the market. It's much more about actually then how we find great trades in both directions, longs and shorts. So here is your measurement from low, where we hit yesterday, right at that support level, low to high, 9.6%. The same pattern and the exact same short squeeze. Now you can say, oh, it was because of a tweet about Trump rolling back tariffs or pausing tariffs. Hogwash. I mean, look, you're welcome to your opinion, but I just think it's not just a coincidence that exactly at the pattern support, we rallied the exact same percentage as we did in 2020. If you believe, as JP Morgan's reported on, that 90% of the volume is from algorithms, 80% of the volume, algorithms, high frequency trading, smart money, it works in patterns. And while nothing is guaranteed, it's crazy how you see them repeating, in this case, exactly the same so far. And so we're going to be diving into this, and again, this is just another fascinating scenario of example of that. What could come next, both to the long side and the short side, where it could end up, and our favorite way to be finding longs and shorts in this kind of market. So I'll hyperlink you there. It's a once-off event tomorrow, Wednesday, 4 p.m. Eastern. So don't miss it live. So register now, and of course we're going to be looking at how we're finding the next batch of goodies that for both puts, shorts, and preparing for those powerful longs that happen even in a bear market. I'll see you there.